Markets sell off on Friday, retesting the June lows. What happens next? That's coming up on 3 Minutes on Markets and Money. It was just a few weeks ago that we were talking about this market being extremely oversold, 3 standard deviations below the moving averages, and extreme negative bearish sentiment. And we said that this was a great setup here for a rally, and that all we would need would be Jim Cramer coming in to call the bottom of the markets. That happened, and of course, that was where we had this nice rally going into July and August. Of course, everybody got very bullish here, and we talked about the fact that when the markets got back up to these overbought conditions, markets 3 standard deviations above the 50-day moving average, that it was a good time to take profits because it had been a very strong rally. Everybody was very bullish about the markets. Markets not only fell, but they have also retraced all the way back now to those lows. So that whole rally that came along in July and August has now been completely erased as of Friday. The question is now is the market set to go lower, or do we get a reflexive rally to sell into? There are some indications here that we could get that reflexive rally. Markets are retesting and holding these lows. Now this morning we're going to challenge those lows from June once again. Markets are 3 standard deviations below the 50-day moving average. So a reflexive rally here back to this 3,900 level certainly would not be surprising. That would be a great area to lift some exposure out of, to sell into, raise a bit of cash, reduce your risk. Markets are getting fairly oversold. That money flow sell signal that we picked up here at the top of the market is now getting back to its lower levels as well. This is normally where we start to see at least a short-term bottom in the markets, much like we saw back here in June. When we saw that buy signal come back into the market, that was the signal for this rally that we had in July and August. Also, our money flow indicators as well as RSI and Williams percent are all getting very oversold. So we have a lot of very oversold condition. Bearish sentiment is now at basically a record. The American Association of Individual Investors, record bearish sentiment there. Institutional investors also extremely bearish. And we had a record number of put options on Friday suggesting that everybody's just hedging for a crash here. Again, all of that negative sentiment, it tends to be a bit contrarian when it gets to extremes, which is what we're seeing right now. Record put option buying, that's an extreme bearishness setup for the markets. Again, this all suggests that if we get a little bit of a rally here, that we have to start reversing some of that extreme positioning. That could lead to a good bit of a fueled rally. Again, back to that 3,900 to 4,000 level. Use that rally as an opportunity to lift some assets and reduce risk, because as the Fed continues to hike rates here, the compounding effect of those rate hikes are going to continue to weigh on stocks, particularly as higher interest rates are now attracting more money flows into the U.S. dollar. That's going to continue to weigh on stocks because of tighter monetary policy throughout the entire markets. That's 3 Minutes on Markets and Money. See you back here tomorrow. By the way, since we just had Hurricane Fiona, are they going to name, when we get to S, is it going to be Shrek?
That's a good idea.
I think they should.
A flagpole and see who salutes.
Nobody.